Thanks so much for joining me to discuss the age trial balance, an essential tool if you're working in receivables management as a business office employee, a biller by training, or a coder who is assisting in receivables management. My name is Elizabeth Woodcock, and I fell in love with receivables management in healthcare when I worked at the University of Virginia Health Services Foundation. Since then, I've been fortunate enough to work in healthcare in the administrative aspects, revenue cycle management, and operations for the past nearly 30 years. So today will be dedicated to this all-important tool called the age trial balance, often referred to as the ATB by persons who refer to it and use it often. Now, this is nothing unique in healthcare. In fact, the age trial balance is used by all businesses in the finance or accounting department. We've probably all, as customers ourselves, been somewhere on an age trial balance. Maybe we, for example, got dry cleaning done. And so as a customer, we owe money for the product, for the service that's being delivered, particularly if we don't pay at the point of service. So if you have, for example, a rent agreement for your apartment, you might be on the rental company's age trial balance as a customer who owes this month's rent. So it's not unusual. It displays accounts receivable, all those monies that are owed to the business by customer, by dollar, and by time. So it's a great management tool for any business when it comes to receivables management. It sounds incredibly simple, but as we all know, if you're listening to this video, you're in healthcare, it's never that easy. So we're actually going to talk about 5 challenges of which you need to be aware to use the age trial balance effectively for your organization. So the first challenge is something that really is problematic for us in receivables management in general, and that our receivables represent gross charges. And you and I both know that it has been many, many, many years since a gross charge really meant anything. So we might bill, for example, $200 for an office visit, but you and I both know that we're never going to get that $200. Probably that's because we're dealing with an insured patient and we have a participation agreement with that insurance company, and we've agreed to net down our gross charge to what we call an allowable. And maybe the allowable is $90. I don't know what it is because it depends on the health plan. It depends on the service that you perform, whether it's a 99213 or a 99214, etc. But the important thing about an age trial balance is that the numbers on the age trial balance, those dollar amounts, represent gross charges. And the only exception is when you what's called net the charge. So as you're posting charges to your system, you actually bring down the charge to what you expect the payment to be, the allowable. That's not standard industry practice, but I have certainly seen medical practices in particular, which have netted the charge down to the allowable for Medicare or for all payers. It's actually not something that I recommend because in a way we're sort of guessing what that allowable will be. And believe you me, you'll never get a phone call from an insurance company that says, oh, if you had just charged a little bit more, we would have paid you a little bit more. And that's because the insurance company is going to pay you the lesser amount. So if you net the charge too far down, they will not pay you what is the expected allowable. But I digress. Indeed, what you need to know is your age trial balance doesn't actually represent what we're expected to receive. It represents gross charges. So the second challenge that we have is this notion of a customer. So back to my dry cleaning example, like I'm the customer. If I rented an apartment, I'm the customer. But for us in healthcare, there's typically more than one customer. Sometimes we refer, and I think more applicably and more appropriately, to our customers as the responsible party. Most often it's the patient, but as you know, the majority of patients in this country have some sort of insurance. And so they're actually covered, in essence, the patient's responsible party is their insurance company. But of course, the other nuance is that oftentimes there's not just one insurance company, but there's two or even three policies at play. And indeed, most insurance companies, at least commercially insured, are actually integrating the patient as a guarantor, even if the patient is covered by insurance. And so we have that through cost share, and that's often done through co-payments, co-insurance, or deductibles. And those three amounts are financial responsibility that actually goes back to the patient himself, herself, or themselves. So again, lots of kind of challenges when it comes to actually customers, even though that's a very simple term. Now, this again seems a little bit funny, but how could dollars be controversial? Well, we already talked about one aspect where the dollar is actually not something that we're expecting to receive because it represents our gross charges. So we sit down with a physician and we go over the age trial balance. And at the end of the day, it says you have $1 million in receivables. That doesn't actually mean he, she, or they is going to receive $1 million. So we need to really help coach and mentor our physicians. We're looking at receivables management reports. But the other interesting thing about an age trial balance is that it includes all credits and debits associated with open invoices. So what I mean by that is that co-payments are in there. And if you collect, for example, a co-payment at the point of service, which by the way, you should be doing, then that's actually going to appear on our age trial balance as a negative number because you're in essence collecting it ahead of the receivable being processed by the patient's insurance company. So you can actually, for the same service, have a $50 credit and a $1,000 debit. The $50 credit is the co-payment that the patient has paid in advance of the $1,000 being processed by their insurance company. And so if you look at this on an individual invoice level, and I'm using that reference invoice as to a service, an encounter, it might have multiple services, multiple CPT codes, but that encounter with the patient may have both a credit and a debit. It's very, I don't want to say it's simplistic, but when you look at a particular invoice, you can kind of see the dynamics. The problem is the age trial balance, as we'll see in just a few minutes, actually rolls up all of these dollars. And so credits obviously offset debits because one is a negative number on the age trial balance and the other is a positive number. And so when you start mixing these, it can also kind of be confusing from a management perspective. So it's important that we understand there's both minuses and pluses that are on this report together. And it may be necessary to really delve deeper to understand what's going on your report. And then again, I can't believe I'm saying this, but our fourth challenge is time. And you're like, what, time? It doesn't make any sense whatsoever. But there's two important aspects of time that relate to our age trial balance. The first is that we can run our report based on date of service. And when you think about that, right, you've collected this co-payment, for example, and you've sent off this claim to the insurance company. Okay, so that's pretty easy. But at some point, the insurance company actually, let's hope, does go ahead and adjudicate and pay that claim. And then it flips the residual responsibility, sometimes called financial responsibility after insurance, to the patient. And so, okay, what do we do with that? What we do with that is typically re-age it back to zero. And the reason we do that is because our practice management or billing system then goes into spitting out statements. Hopefully we're doing those electronically now. If not, maybe on paper, but we go through what we call a dunning cycle. Well, in order to get to that dunning or collection cycle, the receivable has to go back to zero in our system because that's what triggers the statements. So what that means is that if you run a report at the date of service, then you might actually see that, wow, that receivable is really 60 or 90 days old, because even though it went to the patient and looks like in the billing system that it's 0 days, because that's what it needed to do to trigger that dunning cycle, it's really 60 or 90 days old. So time actually can be represented in different ways on the age trial balance. If you run it by date of service, your receivables are going to appear much older, but it's actually the age that they are. Because if I was left a co-insurance, for example, from my insurance company, United, that adjudicated the claim 60 to 65 days after the date of service, then the real date of receivables for me as the co-insurance is actually 60 to 65 days old. But in your system, it's going to appear 0 to 5 days old, because that's what, again, generates the statements. And so oftentimes the default to the report is the date of responsibility, or sometimes we call that the bill date. And what that basically does is time with our system. So that, for example, if our primary insurance pays and we reset back to 0 in order to get that co-insurance, then our age trial balance would show that co-insurance reset back to 0. So in my opinion, I actually think there are advantages and disadvantages to both ways to run it in terms of time. The most important thing for you is to actually know how the report is being run. And oftentimes I find that billers don't understand these dynamics. Now, the last challenge is that the age trial balance, by its very nature, is dynamic. That is, unless you close your practice, it's always going to be adding money and subtracting money, right? Because you're working really hard from a receivables management perspective, trying to collect this AR, and your front office, and maybe you're always constantly collecting money. Those are sitting as credits on our report. And indeed, money's coming in and out. So anytime you look at an age trial balance, if you run it again, even an hour from now, it's going to look different. Don't be surprised by that. And in fact, the dynamic nature of the report is actually one of its advantages. So let's go over these challenges, and then we'll kind of delve deeper into what an age trial balance actually looks like. So the first is that we carry receivables as gross charges on all of our reports, including our age trial balance. And so what that means is when we sit down with ourselves or with our doctors or with our APPs and we start going through the report and they say, oh boy, $1 million. Wow, what can I do with $1 million? We have to say, oh my gosh, just recognize that these accounts receivables, I can never collect $1 million for you, because the way our systems work is these receivables are actually carried on charges. And then you would need to coach or educate your physician or APP by telling him, her, or they, well, we expect to receive about 40, 50%. I don't know what that number is for you. You would need to calculate it for your own practice if they are interested in how much of this money will actually turn into revenue. So the second challenge is that in healthcare, we have multiple customers for each service. So we typically have an insurance, sometimes we have 2, a primary and a secondary, sometimes even 3, a tertiary policy. And then oftentimes we also have patient financial responsibility. Credits are included, the most common credit being a copayment that's collected at the point of service. There is no single time. I've explained the 2 primary ones, which are date of service and bill date. And again, those are going to show different things, both important, but you just need to know how your report is being run, and that will help you figure out how you best use it. And then last but not least, the last challenge is that is a dynamic report. It is constantly in flux. So you really need to decide when you're going to run it. So what are the actions that you need to take? First of all, understanding these nuances gives you a lot of power because oftentimes your providers are really leaning on you to explain what's going on. And so knowing the report yourself, I think, is really helpful, not only for yourself in terms of being a better receivables manager, but also being able to convey the information to other stakeholders. It's absolutely crucial to document everything. So when you're running reports, you want to make sure that you include all kinds of footnotes about when the report was run, what time it represents, how many physicians or providers it represents, etc. And then really kind of determine what helps you the most with your business intelligence in terms of which manner you're going to use to run the report. And to make sure that in addition to kind of having like a display, make sure you figure out how to use it dynamically. And I always recommend to add an age trial balance to your end of month processes. So I've been talking about this, but exactly what is an age trial balance? So what I wanted to share with you is just an example of an age trial balance. And what this is taking a look at really a deep dive. And I'm only showing you a portion of this age trial balance in order to illustrate it. So what I have is how the report is running. So this is running by insurance carrier. And you can see the carrier, Cigna, here I've just given you. And of course, Cigna is not just a single category. They have multiple health plans. So you can see on this age trial balance, we have all the health plans. And I do want to point out this number here. So this is insurance tickets. This is just one example of a practice management systems report, but your system may run it a little bit differently, but you want to be familiar with all these aspects of the report. And what this is actually showing us is the volume. And I think this is really important because what I like to do is really kind of look at not only the big dollars, but also where the big volume is. So I've got 250, for example, invoices outstanding to Cigna on this health plan, which is encoded in my system as 16502. So I might go ahead, if I'm a biller, really target that, or if I'm a manager, really have one of my team members really work on that aspect. And so the other thing I wanted to share with you is that oftentimes an age trial balance is broken down by patient and insurance percentage. And as you can see, there's not a lot of patient receivables here. There's a little bit here. But you can see right here, there's a negative number. That's going to be where I have a co-payment or maybe a co-insurance that I've collected. And you can see at the top of this column, right, here's all my aging categories, but I have this really funky one called deposit. That is likely monies that have been deposited, but have not yet been associated with an invoice, or the invoice hasn't been processed. And this is something that I would, if I was using the practice management system, want to sit down with my support team and say, explain exactly what's going on here, because you need to understand if you're going to be a good receivables manager. We also know that we have our aging categories here, 0 to 30 and 31 to 60, 61 to 90, etc. These are going to be on days unless otherwise told. And then you have a total column right here. Now, importantly, the percentages, we're going to have to figure out what this means. Underneath the percentages are the percent of these dollars to the total in that row. But there's also percentages here, and these are going to be percentages to the total in the column. And so by that, I mean, let's just take a big one. For example, our Cigna 16502 right here does represent, as you can see, 1.48% of all of our receivables. Again, all of our receivables. So that's going to be kind of an important part of really understanding how this report works. So that's the detail. And then we have right here at the bottom, and I've just copied and pasted certain aspects of this report. And again, a really easy way to check this is just to say, okay, I think this is the sum of all of the rows. Let me just make sure. Oh, yes, correct. That's awesome. So I often, especially since I work with a lot of different practice management systems, age trial balance, I'll go in and just double check and make sure I understand what's going on. And we can see here for these percentages is that 9% of this organization's $19.9 million in receivables are owed from patients, and 90.97% are owed from an insurance company. And this is very common. And I think it's really important for us to recognize that it doesn't mean that ultimately patients won't owe 9.03%, because oftentimes it's stuck in receivables in the insurance company until the claim is adjudicated. And then, whoops, it pops off that, for example, co-insurance or co-payment would pop off. Maybe it's, I don't know, $400. And then what happens, remember, in our systems, it goes back to zero. And why does it go back to zero? Because that's how it starts the Dunning cycle. And it goes back to zero, in this case, for co-insurance and patient pay. So in total, the organization who has this receivables, remember at this moment in time, does have about 19,000 insurance tickets outstanding. So what this would help me do from a staffing perspective is kind of figure out, okay, how many of these tickets need to be worked? I'm generally not going to work them in the deposit phase or the 0 to 30, which, wow, we've got, as you can see, 61% of our receivables in 0 to 30. But once I start getting into 31, 60, 90 days out, I know as a biller that I'm going to have to intervene. Something is going wrong. And so that's why I was saying this report is if we can use it to drill down and really get to the actual details of what's behind these numbers, it can be an incredibly successful report to help us work. Because I'm going to maybe target, as I was talking about, Cigna and the over 120, because if Cigna hasn't adjudicated that claim, I know darn well that I'm going to need to intervene, figure out why it was denied, why it's pending, why it's under medical review. And then, of course, as a biller, I need to do something about that. So if we return to our age trial balance, then we can see indeed that we do have an opportunity to really take a kind of roll-up aspect. And this is what I would share from a management perspective. And this is a different set of numbers, but what you can see that I've done very similarly to that report, although I've gone out to 120, 150, and 181 days, is I've taken the kind of roll up, what I would consider roll up categories. And for you, if you don't have a lot of Aetna in your market, for example, you may not have Aetna on your age trial balance, or Blue Cross Blue Shield or workers' comp, for example. You may have Cigna or one of your other payers. So it's really up to you. There's no industry standard about what to actually include on the left side in terms of the rows. But again, really go back to the business intelligence that you need to really be able to run your practice, run your organization from a receivables management perspective. So what I would then do likely is kind of even roll it up even more. And I would take this information and really be able to hone in where my opportunities are. For this organization, this was actually a real organization. I was very, very concerned about this 36% over 120 days, because that does show me that something really is going amiss with the management of the receivables, because we really shouldn't have 36% of our receivables outstanding over 120 days. But just with this report, I can't tell what's going on. And so the age trial balance is really just a signal when it's at this kind of higher summary level. It really has to be dug into in order to figure out how to take action, really where my opportunities are. Here's a third example. Again, you can see this is kind of a roll up. I had a lot of TRICARE, Blue Cross Blue Shield, workers' comp for this organization. But what I love about this is really taking it from all of this very intensive numerical data and putting it into a graph. And I love to call this a waterfall report. And part of the reason I like to use that term is because what we are looking for is a waterfall. I want a steep curve. I want a really steep curve on the 0 to 60 days, because what that means is my receivables are processing, I'm getting paid, and as a biller or a coder, I don't have to step in and take action in order to appeal them. And so oftentimes this really, the kind of 91 to over 150 is where we're going to see us adding a tremendous amount of effort in order to get paid. And you can see, not surprisingly, that the self-pay line actually goes up and does not look like a waterfall, which basically means that we're not very effective at collecting those self-pay accounts. And so that's a great way to display. Now, I refer to that 30+% as a little bit of a concern. Generally, my kind of industry standard is I'm looking for 10 to 12% over 120 days, with some practices down under 10%. I'm okay with 13, 14, 15%, particularly if I have a lot of Medicaid, MCOs, workers' comp, a lot of really challenging payers, because our age trial balance and really receivables management in general does depend on the payers in your market and how fast they're paying and how effectively they're paying. But once I start getting to 20%, I at least need to dig deeper. I've got some alarm bells going off, because I really should not have over 20% of my receivables outstanding over 120 days. So some value adds when it comes to an age trial balance is to consider paying attention to volume, not just dollars, because that really helps us thinking about staffing. And last but not least, a great tip is to add a separate payer category called a payment plan. Because when you think about it, when you put patients on a payment plan, you are agreeing proactively to age their receivables. And I would argue that they should not be put on a age trial balance and sort of added to the bad part, meaning, oh, you really shouldn't have 20% over 120 days. Well, for payment plans, you should. If you have a patient on a 6-month payment plan, then you are effectively agreeing to age that receivable. So add a separate category, and once a patient does go on a payment plan, put them in that category, and it really can add a lot of value to your business intelligence that you can achieve from your age trial balance. So I hope that you have understood the nuances of an age trial balance in a healthcare organization. I hope this has really been a great training and learning opportunity, because an age trial balance can certainly be a helpful tool if you understand what it represents and how to manage the tool yourself. Thanks so much.